How are you?
I am very well, and it is good to be with you, my friend.
Even better to be here in person with the warm weather. So we're sorry we don't have you here, but thanks for taking the time.
Professor has obligations to his classes that even exceed his obligations to his friends of 40 years like you.
Well, thank you. Well, we'll take this deal, and thanks for being with us. Look, my big question for you, Larry, is I mean, we saw the Fed yesterday move another 75 basis points. We had Brian Moynihan on the stage last night saying when he looks at the data, he doesn't see any slowdown. And so my big question for you is, what is it going to take? How much do interest rates have to move? How much economic pain are we going to have to suffer in order to get inflation back down to 2%?
Alan, agree with my friend Brian that the economy is running fairly strong right now, and stronger than I probably would have expected. I was struck by the number that came out on Monday that the number of vacancies in the economy had popped back up, suggesting that we were moving back to a labor short economy. There's nothing that I've ever seen in economic experience that suggests that inflation comes way down, and we've now got inflation at 7, so it has to come pretty far down, without there being some meaningful amount of restrictive policy. And then that restrictive policy also restricts growth and employment in the economy. So I think after a long period when the Fed was really not in the right place at all and almost had its head in the sand, believing in a transitory theory, Chairman Powell's navigating it into the right broad area. The market's now expecting that the federal funds rate, which just got increased to 4, will get up somewhere in the 5.10, 5.25 range by next April. My guess would be that the inflation pressures are still going to be a little greater than people suppose from the labor shortage. And so my guess would be that interest rates will end up, Fed funds rates will end up above that. I would not be amazed if they got to 6, but that's certainly not what I would be predicting. I think it's very hard to know what's going to happen to inflation and unemployment. My instinct is that in some ways it's easier to forecast the two of them together than to forecast one of them alone. If we are actually on a path that brings inflation back close to the 2% target, I think we're likely to have seen a meaningful increase in unemployment. But whether we will actually push the process as hard in terms of disinflation, I'm less certain. Chairman Powell's certainly been very, very clear about his intent, but he hasn't really been clear about his intent at the same time that he's been recognizing the price of his intent in terms of higher unemployment. It's a little bit like if I said I was going to buy an apartment in New York, you'd believe me. But if I said I was only going to pay $500,000 for it, then you'd wonder whether I was really going to do it. That's a bit how I feel about the Fed's forecasts that unemployment will never go above 4.5%.
And you know, you and I at least are old enough to have seen this movie before. Are we better off as an economy to take the hit now, or to spread it out over time? You know, if it's a mild recession and it doesn't get get inflation down as much as needs to be, can you do that slowly over time rather than in a big hit all at once?
There are lots of metaphors. You can have a battle of metaphors talking about pulling Band-Aids off and stuff like that. But I think the more serious way to think about it is that I think the best point that the people who are far more dovish than I, like Paul Krugman, make, is that unlike in the 1970s, we have not yet seen a big increase in 5 or 10-year inflation expectations. So right now, there's still a sense that we're in the range of price stability and that this has some temporary element in it. And that puts a lot of wind at the back of anybody trying to reduce inflation. But if we let this continue for too long, we will lose that advantage. And that's why I think it is likely that the total cost of containing the inflation will be lower if we act more rapidly rather than if we act less rapidly. And I think it's important to remember that core inflation right now, on the last figure was 7 to the nearest round number. And that was more than the month was more than the quarter, and the quarter was more than the half year, and the half year was more than the year. So it certainly wasn't coming down fast. And after yesterday, we've got interest rates at 4. So it's not like we're stepping on the brake with unprecedented force or anything like that, or anywhere close to stepping on the brake with unprecedented force. So for now, I think the risk of doing too little is greater than the risk of doing too late. And I make one other point, Alan, and maybe you'll disagree with me on this because you've been covering this stuff for 4.5 decades. I can think of a variety of moments when, in retrospect, the Federal Reserve or some other central bank should have raised rates more and been more disciplined about inflation. Everybody worries that the Fed is going to move too quickly, that they're going to forget the lags, and then we're going to get an economic downturn. And that's certainly something that has to be balanced. But I'm not aware of a historical moment when that ever happened. And in general, I think it's better to worry about negative scenarios that have occurred before than negative scenarios that have not occurred before. That doesn't mean there isn't a risk, and that doesn't mean that the Fed doesn't have to strike a balance. But to put the point another way, is anyone really thinking that we're going to have such a bad recession that it's going to push inflation below the 2% target? And if we are serious about the 2% target, then why would we think that policy had been too contractionary if inflation is not falling below the 2% target? Now, there's a set of arguments. I understand them. I think they wouldn't be my arguments that we should not have a 2% target. We should have a higher target for inflation. But gosh, when you've made the kind of mistakes the Federal Reserve has made over the last year and a half of not taking inflation seriously, and you've pounded away at your commitment to a target, this doesn't seem like the moment to abandon that target.
There is a line of thinking, and you've already alluded to it, a line of thinking that because expectations are not dug in the way they were when Paul Volcker took over the Federal Reserve, that it's going to be easier to deal with. For instance, one of the things some people, I think it was some economists at Goldman Sachs who argued, we don't actually have to raise the unemployment rate to combat inflation. We just have to bring down the unfilled jobs rate, eliminate some of that competition for jobs. Is it possible we can get out of this with less pain than you seem to be suggesting?
Here's a piece of advice for all your viewers. Any any economist who says that something is impossible or they're sure that something will not happen is an economist whose opinions you should dismiss. So I answer all questions of the form, is it possible, by saying yes. If you ask me, however, is it likely, and you make that comparison with Volcker, I would make 2 points. The first is that Volcker's disinflation pushed the unemployment rate to 10.8%. And nobody, not the fiercest hawk anywhere on the planet, thinks we should elevate unemployment halfway to 10.8% from where we are now. The second is this seductive idea, and I think it is seductive, that we can just get rid of the vacancies and not have any increase in unemployment. Here's the fact. Right now, the excess of vacancies over their normal level is about twice as large as it normally is in periods of strong economic performance.
Right.
So the number of vacancies we might have to eliminate is kind of 2x. There have been 9 previous instances since World War II when vacancies came down significantly. In every one of them, unemployment went up substantially. So maybe it will turn out that this one is different. And you can argue that there's special features of the post-COVID economy. You can argue that precisely because vacancies are so high, this time is different. But in general, if you had to bet with 9 previous experiences or bet with no previous experiences and optimism, I think the better bet is with 9 previous experiences. But again, anything is possible. Frankly, the argument you're making looked better to a lot of people, including me, 5 days ago, before they got the most recent vacancies data, because there had been a big decline in vacancies last month without any increase in unemployment. But now a quarter or a third of that decline got revised away, and about half of that decline got reversed. And so you're seeing it much less right now. But look,
you don't leave a lot of room for argument, Larry.
Anything is possible.
You don't leave a lot of room for argument. I have a lot to talk to you about, but I also want, if anyone in the group here has a question, just stick your hand up and we'll get a microphone to you. Look, you were, according to the reports I read, in large part responsible for convincing Joe Manchin, who's going to be with us in just a few minutes, convincing Joe Manchin to switch his position on the poorly named Inflation Reduction Act to support it rather than oppose it. Can you share, and it's a really important argument, I think, for people thinking about the effects of government spending. Can you share the argument you made?
I don't get into my private political conversations, and I never take credit or blame for the political decisions that anyone I've given advice to. Those are their decisions. What I will do, Alan, is say what I thought about the Inflation Reduction Act in contrast to what happened before.
Yeah.
There were 3 differences between the Inflation Reduction Act and the Rescue Act that took place at the beginning of 2021. First, the Inflation Reduction Act was $600 billion over 10 years, whereas the Rescue Act was, plus the earlier stimulus, was $2.8 trillion over 1 year. So there was a total difference in scale. Second, the Reduction Act was paid for fully by tax increases and other revenue increasing. So there was no net change in the demand balance. And third, substantial parts of the Reduction Act were measures that would increase the economy's supply potential over time, not simply pump up the level of demand. So factor of 10 difference in scale, paid for versus not paid for, expanded, increased capacity versus just increased consumption spending. Those were the reasons why I thought they were very different.
It's that third.
Potential inflationary impact.
Yeah, it's that third one that's kind of unique, and you laid this out before this administration even came in. That if you're investing, if it's investment in the energy transformation, or maybe also in something like childcare or training, that it has a fundamentally different effect on inflation. Do you feel like you've made progress with that argument?
I think I'm making some progress. Look, it's the same basic logic for the government as it is if you're advising your kids. If your kids want to borrow money to go educate themselves, or they want to borrow money to buy the house of their dreams that they're going to live in for 30 years, that's probably a very reasonable idea, particularly if interest rates are low and they're locking in a low rate. If your kids want to borrow because they didn't earn as much money as they'd have liked to, and they still want to eat out a lot and take a lot of vacations, that's probably much less sound borrowing. And some parallel principle applies with respect to the government. Yes, and I think that is becoming better understood.
Larry, I know you are still in close contact with people in this administration. The administration has from time to time blamed inflation on corporate concentration or corporate profiteering. What do you think of those two arguments?
I don't think that those are the administration's soundest economic pronouncements. I think there are a number of areas where we should have stronger antitrust enforcement, but I don't think inflation has anything much to do with gouging or monopoly power. And I think some of the doctrines that have been put forth by the so-called neo-Brandeisians are really very radical and very unfortunate and are the wrong places to go. Look, I think there are issues that Democrats are right to have with business. There's some stuff with corporate tax shelters that had carried interest tax break, a variety of things that I think are kind of outrageous. But I think some of the regulatory kinds of agendas that treat profit as a bad thing, treat business as a money pot, fail to partner, I don't think that's the right approach for people to take in terms of getting things done. I like approaches based wherever possible on partnership much better. And I think there's some real potential in the green area in particular to do that. I think the CHIPS Act is going to be a very important test of how well as a society we can do in having government business partnerships on some really important issues.
I'm glad you raised the CHIPS Act, because the last time you were on a Fortune conference stage was in the fall of 2018 in Toronto at the Fortune Global Forum. And I remember how you ended that conversation. You said the most consequential thing to watch for economics and the world over the coming decade was the relationship between the U.S. and Japan. That was 5 years ago. I'm sorry, I misspoke. China.
I suspect I said.
Yeah, I misspoke.
1992.
Apologies, I'm still waking up.
Yeah.
U.S. and China.
I suspect it was China.
It was China. I totally misspoke. 5 years have passed. And a lot has happened in the U.S.-China relationship over those 5 years. What do you see now?
By the way, Alan, if you're going to make a habit of remembering what I say at Fortune conference.
Oh, yeah.
Throwing it back in my face 5 years later. I may not speak at a lot more Fortune conferences. But in this case, I'm glad I said that because I think it was right. I would say relative to what I would have expected then, we're in about the 10th or 15th percentile of outcomes. I think the relationship
On the bad side.
On the bad side.
Yeah.
Because I would say the relationship has massively deteriorated on both sides. I think primary responsibility for that rests with Xi Jinping and a variety of excessively assertive, aggressive, nationalist, discriminatory, totalitarian policies that China has followed. But I don't think the United States has yet in place a sound strategy beyond pointing up its legitimate indignation. But warranted indignation does not constitute a strategy. And I am very concerned that the situation has more and more overtones of Britain and Germany as one moves from 1910 towards 1914. Some of it is geopolitical and the difficulty in maintaining the peace through ambiguity approach that has been successful in Taiwan for 50 years. Some of it has to do with the question of rules governing trade. The most undercovered story of the last 3 months, and maybe of the last 3 years, has been the extent to which the American government launched a kind of economic warfare on China with the semiconductor restrictions that were announced several weeks ago. Now, I don't have access to the classified information that would permit me to judge whether those steps were necessary or not. But I do think their framing was very much one in terms of a kind of economic warfare and holding the China down rather than limiting access just to key military technology.
Yeah.
And I think that has to strengthen the hawks in China. And so I hope when President Biden and Premier Xi meet in Bali, it can be a basis for not getting this to affection, God knows, not getting this to partnership, God knows, but of stabilizing it.
Yep.
Because I think we in China are like two guys, each of whom hold an oar in a lifeboat, a small lifeboat in a turbulent sea, a long way from shore.
Yeah.
We depend on each other. Even however we may feel about each other, there's no alternative to finding a way of functioning together.
Larry, on that encouraging note, I will let you get back to your teaching, but thanks for taking some time to speak with this group. We really appreciate it.
Thank you for having
Yeah.
Thank you for having me, and good luck to everyone.